whatever it takes to keep you in debt. Well, maybe not you, but whatever it takes to keep most people in debt. Hey, everybody, it's JJ here. It's Sunday, Easter Sunday. Happy Easter Sunday to everybody listening. Even if you're listening to this on Monday, I hope you had a great weekend and hope you did what you love doing. Hope you spent time with your family or doing whatever it is that you love to do, whatever it takes to keep us in debt. Is that really the goal of this institution right here, of the people that work within the walls of this building? Well, let's analyze this article right here. This is a recent article out of Axios, and the name of it is To Infinity and Beyond. Now, the word infinity is being used here to describe the amount of money that the Fed has at its disposal. And of course, if you've been on this channel even a short amount of time, you know that it's unlimited, it's infinity. Why? Because it's a fiat currency. And why is that? Well, that's because it is a fiat currency. You can create endless amounts of it out of thin air. It's not backed by any commodity. You could say it's backed by oil, but it's not tied to oil as far as how much you can create. So therefore, infinity is a proper word to use. It's an accurate word. Now, this article goes on to paint the Fed as the saviors of the economy. But at the same time, it also reveals a lot of truth about this institution. Let's take a look into it real quick. Okay, the article starts off, quote, "We're not in the throes of a greater depression, and we're not facing a tsunami of bankruptcies. In fact, the stock market is hitting new record highs while employment is rising fast. For all of these things, thank one institution above all of the others, the Federal Reserve." All right. Well, first of all, we've debunked this pretty much every week when we talk about employment is rising fast. Well, the economy is adding jobs. The problem is new jobless filings are about 3 to 4 times of the new jobs being added every week. The problem is a lot of the people that are unemployed are dropping off of the unemployment eligibility rolls, making them no longer counted as unemployed. So it makes the unemployment number actually keep dropping when in fact more people are no longer qualified for unemployment, therefore are no longer counted in that statistic. Okay, again, if you've been on this channel for even a short amount of time, you've discovered, you've witnessed the way that we look at the numbers and debunk that whole theory that employment is actually rising. And it goes on to say, the infection crisis has made it abundantly clear the awesome power of central banks in general and the Fed in particular. Now, they do have awesome power. Now, do they use it to help the people or do they use it to help the banks? Well, this article goes on to basically tell exactly what's happening. They use it to help the banks. Let's scroll down a little bit in the article. And it goes on to say it here. In a crisis, however, the Fed has now shown beyond any doubt that it is both willing and able to create as much liquidity as they need to put out all the fires and get the economy floating happily again. Now, when they say put out all the fires, are those fires that the Fed actually created in the first place? Right? So it's the case of the firefighter committing the arson is what it is. And they go on to quote a Fed chair, Neil Kashkari, and he said the following in an interview, quote, "There is an infinite amount of cash in the Federal Reserve. We will do whatever we need to make sure there's enough cash in the banking system," unquote. Right? So that should tell you all you need to know. Enough cash in the banking system. What do banks do? They loan out money. Do they loan it out for free? No, they loan it out with interest attached. So if the Fed really were out there to help people, then they would not give it to the banks, they would give it directly to the people. Now, of course, they're going to give out a little bit to the people, aka $1,400 stimulus checks. But you can see the fact that they want to make sure there's enough cash in the banking system. That's all you need to know. They're not here to help the people, they're here to help the banking system. Now, if you use borrowed funds wisely, you can make money on borrowing. Just ask a business that's ever taken out a business loan. And in the end, if the business is successful, they will ultimately make more money than they borrowed, enough to pay the loan back, including the interest. Interesting article. I like a lot of the articles coming out of Axios. And while this one tries to paint the Fed as heroes, all you have to do is read into it a little bit, and they basically admit the truth that the Fed is not there to help the people, it's there to help the banks. All right, now let's transition a little bit here. The rest of this video, I want to focus on what appears to be an improving economy. Is it actually improving? Well, you might have seen headlines like this: manufacturing boom brings more signs that inflation is building rapidly. Manufacturing has expanded at the fastest pace since December 1983, according to a recent survey. Another article here: U.S. manufacturing index races to 37-year high in March. So what's happening? Well, there's a flood of money being pumped out into the economy, including keeping the banking system fluid so it can continue to issue out loans, aka debt, and that creates jobs, and it will create demand for products and goods and services, and therefore that will cause an uptick in demand in manufacturing. Also, the stimulus checks helps. The economy is reopening, so there is some hiring, rehiring happening. Is this sustainable long term? Well, not likely. You're going to continue to see rising prices and inflation. You're going to continue to see more people dropping out of the labor force and more people not working by choice. There's actually several articles out here that I've witnessed recently where companies are saying they cannot find workers and they're willing to hire people without experience. And I think a big part of that is because of the handout economy. A lot of people just want to sit back, wait for the next stimulus check. A lot of people are waiting for UBI to become implemented, and I think we're getting closer and closer to that day. So these businesses that are looking to hire people now have more competition, and the competition is the handout economy. So now you're going to have to pay more as a business to get people to work. And the big mega corporations, they'll be able to handle that just fine, but small mom and pop shops and small businesses are going to have a more difficult time increasing the pay. And the people that are in the working class, you're going to continue to see prices rise. They're going to take more and more of your paycheck to pay for so-called economic stimulus and all the spending. And it's going to be more incentive for people not to work. People are going to get discouraged. They're going to get frustrated. People that are getting up early, driving to work, are going to see their neighbors and people that they know, their friends, not working and still ending up in the same spot that they are. And it can get very frustrating after a while. Now, this huge infrastructure bill that's going to be coming out, we're going to talk more about that in more depth in future videos. At the beginning, it's going to create jobs. The problem is the spending that it's going to take to implement it and keep it going is ultimately going to, again, come back to the working class, because they're going to tell the working class that they're the ones that are going to have to pay for it. Right? So again, most people don't know that this money is infinite. The Axios article admitted that it's infinite. They have unlimited amounts of money, but still most people have no idea. They don't read that deeply into the situation, into the system, and the monetary structure. So people are happy to give up more of their paycheck if they think it's going to be used for something good. The roads, infrastructure, bridges, and yes, that will create jobs, but eventually it's all going to come crumbling down. Can they keep this going a lot longer than anyone expects? Absolutely, and that's where you see hyperinflation. Just ask people from the countries that have seen hyperinflation: Lebanon, Zimbabwe, Venezuela. The people there that were savers, that held most of their assets in cash, waiting for deflation, waiting for the economy to correct, they were the losers, because prices just ended up never coming down, continuously rising. And it's that danger, that hyperinflation danger, that we have to look out for, not deflation. Deflation will be very painful if it's allowed to happen, but ultimately that is the answer. All right, markets need to be allowed to correct. The central planners, the Fed, they are not looking out for the best interests of the people. It may appear that way, especially when these infrastructure packages and the spending creates jobs initially, ultimately it punishes the people that choose to work. It's going to continue to get more and more dangerous, people. Please let me know what you think down in comments. Thank you to each and every one of you for listening, for engaging in this channel. You leave excellent comments. I learn a lot in comments from what you put down there. So let me know what you think about this Axios article, painting the Fed out to be the heroes. Are they the heroes, or are they the firefighters that committed the arson? You let me know. Thanks for watching, everybody. Stay well, stay safe, stay prepared, bulls and bears. Bye for now. Peace.